Hello and welcome to the Property Talk podcast from RW Invest, bringing you tips and advice on all things property investment.
The issue of house prices after Brexit is one that's been dominating both property news and the UK press for many years now. Ever since the Brexit vote in June 2016, many UK residents and overseas investors have been left wondering, will property prices drop after Brexit? This state of mind remained for many years following the vote, provoking a lot of uncertainty. In 2019, the UK was set to leave the EU in March, and then again in October, leading many to question, will house prices drop in Brexit after 2019? As of January 2021, the UK has now officially exited the European Union after the end of the transition period, and levels of uncertainty over house prices after a no-deal Brexit have fallen. However, Brexit is not the only concern the country currently faces, with the COVID-19 pandemic bringing further property market anxiety for 2021. For property investors eager to find out whether new Brexit laws will affect their finances and investments, we've compiled this in-depth guide to Brexit house prices with expert advice on everything you need to know about property prices after Brexit. This includes whether or not there will be a drop in the average house price after Brexit unfolds, a recap of the key Brexit news from the past 5 years, and all the top predictions for the property market after Brexit. We also discuss the combination of COVID-19 and Brexit uncertainty and how this is likely to affect the UK property market moving forward. Interested in learning more? Keep listening for our detailed Brexit housing market guide. One way that we can try and find out about the overall Brexit effect on house prices in the UK is to look at past property price changes. In the months leading up to the Brexit vote in June 2016, there was a lot of uncertainty in the press. Many Remainers were fearful of an outcome in which the UK voted to leave the EU, resulting in articles asking, will house prices drop, and should I buy a house before or after Brexit? So what actually happened in the months following the Brexit vote? While the UK economy did slow down throughout the second half of 2016, the country's property market didn't immediately suffer the so-called Brexit Armageddon that was initially feared. The GBP had one of the biggest drops that the UK economy had experienced after the Brexit vote, with the pound sinking to a 31-year low against the dollar on Wednesday the 6th of July 2016. By the 24th of August, however, the pound rose to £1.32 against the US dollar, the highest rate it had been at in 3 weeks. After months of will house prices fall after Brexit and how will the Brexit vote affect my investment, it became evident that fears of a declining house market after Brexit's vote were not living up to the expectations. Findings from a Bank of England regional agent survey revealed that while there was a dip in the UK property market activity following the 23rd of June, the market had proved to be far more resilient than first expected. By October 2016, house prices had risen by £2,623 in just 1 month, boosting the average UK house price to £309,122. In the year from October 2016 to October 2017, property prices in the UK as a whole grew by 4.5%, revealing an optimistic outlook for the UK's housing market. So, just how drastically have property prices after Brexit's vote grown from 2016 to 2019? According to data from the Land Registry House Price Index, UK house prices increased by 11% in the 40 months following the European Union referendum. The highest level of growth was seen in England, followed by Wales, Scotland and Northern Ireland. Specific regions in the UK also saw higher growth in house prices after the Brexit vote in 2016, with the highest rises coming from the West Midlands, East Midlands and the North West. These promising house price statistics were definitely good news to those investing in UK property, but there was also the question of rental prices and how fluctuations in the rental market could impact buy-to-let investments. With buy-to-let, rental yields are one of the key factors that investors look for in their property ventures, and many were left wondering whether their rental income would be affected by the 2016 vote. Thankfully, this wasn't the case, with average rental yields in northern UK areas having increased by up to 4.3% by the end of 2016. While these statistics by no means provide a solid answer to the question on so many people's lips, will the housing market crash after Brexit? They do suggest that the uncertainty brought on by Brexit may not damage the property market as much as many people predicted. Judging by how well the UK property market held up following the EU referendum vote, it's hopeful that our final exit from the EU will bring similar levels of certainty to the market. The lead up to the 2019 referendum was a tense time for the UK government, with many fearful of Boris Johnson's intentions for Brexit. One of the biggest concerns was that with Johnson leading the country, we would end up with a no-deal Brexit, prompting many to question whether the average house price after a no-deal Brexit would suffer. While we're still unsure of the latter, it's evident that Boris Johnson's election had, in fact, strengthened confidence in both Brexit, the UK economy, and the UK property market. It is for this reason that Boris Johnson's election victory in 2019 had led to what's now being referred to as the Boris bounce. Ever since Boris Johnson won the 2019 general election with a large Tory majority, a number of improvements have been noted. As soon as the result of the general election was announced in December 2019, the GBP reached a rate of 1.35 USD, the highest level it's been at since May 2018. This massively increased confidence in the UK economy, especially since the GBP reached lows of 1.22 USD after Boris Johnson first became Prime Minister back in July 2019. At the same time, following the 2019 general election, investment sectors witnessed significant growth in share prices. The share prices of FTSE 100 and FTSE 250 companies grew by 1.1% and 3.4% respectively, while Barclays, RBS and Lloyds all saw share prices increase by 6%, 8% and 5%. Property developers and contractors in the UK also saw their share prices grow, such as Barratt and Permission, who reported increases of 14% and 12%. The International Monetary Fund, an international financial organisation, has even predicted that thanks to the Boris bounce, the UK will see stronger growth in Germany, Japan and France in 2021. So what do the house price growth figures say? According to Halifax data, December house prices reportedly leapt by 1.8% compared to the previous month, boosting the annual increase to 4%. Additional research also shows that as of January 2020, average asking prices for properties in the UK had risen by 2.3% since the 12th of December. According to Rightmove, this increase had added around £6,785 to the value of an average UK property, boosting the average property price to £306,810. Interestingly, this is the largest monthly rise for this time of year recorded by Rightmove since 2002. If you're an investor that's wondering how will property prices be affected by Brexit, figures like these, paired with the overall evidence of stability in the UK economy, should be enough to put your worries at ease. While we still don't know what will happen to property prices post-Brexit's transition period, particularly whether or not we will be able to expect a drop in the average house price, recent patterns following major Brexit-related events have revived property market confidence as a whole. If you're still unsure about the possible outlook for the housing market post-Brexit, we've compiled a selection of thoughts and predictions from some of the top industry experts. This FAQ section of the podcast also includes more up-to-date house price predictions post-Brexit, which incorporate the impact of the COVID-19 pandemic. Over recent years, the question on many people's lips has been, will house prices crash after Brexit without a deal? In July 2019, the Office for Budget Responsibility predicted that a no-deal Brexit could cause property prices in the UK to drop by almost 10% by mid-2021. Thankfully, after months of negotiations, the UK and the EU agreed on a post-Brexit deal on the 24th of December. One of the biggest worries many people had over house prices after Brexit revolved around the no-deal Brexit and what this might mean for the future of the property market in the UK. That's why, once a deal was finally agreed on, a newfound level of certainty entered the housing market, and there's reason to believe that this increase in confidence will give the property market a boost throughout 2021. While the country still faces the threat of COVID-19 and its impact on the economy and housing market, the combination of a new Brexit deal and the introduction of the COVID-19 vaccine definitely brings some optimism to the market moving forward. From what we know about the Brexit deal so far, such as the fact that there will be no taxes on goods, it's likely that mortgage rates will remain low as inflation is avoided. Lower mortgage rates, combined with the continuation of the stamp duty tax holiday until March 2021, will hopefully encourage further levels of property market activity in the UK and increase the strength of the buy-to-let market. So, Will Brexit affect house prices? Here's what the experts expect for house price predictions post-Brexit. Property experts behind the popular estate agents portal Rightmove predicted that house prices in the UK would grow by 2% on average in 2020 due to an increase in market and consumer confidence. As of October 2020, it's evident that the UK market has exceeded the predicted rise in house prices after Brexit negotiations began. New research from Rightmove has revealed that UK property prices are now 5.5% higher than they were a year ago, which is the largest increase in 4 years. Property market activity from both homeowners and investors also hit records in September, and the number of active buyers was recorded as 66% higher than a year ago. These are all fantastic signs that after the final outcome of Brexit, house prices will remain strong despite any economic uncertainty that may remain. Much like in previous years, the northwest region is expected to dominate the housing market post-Brexit, while the south is likely to see less growth. Property experts JLL predict that the London housing market after Brexit is set to see some progress over the coming years. In a recent study, JLL have predicted house price growth of 1% across Greater London in 2020, followed by a 2.5% growth in 2021 and 4.5% growth by 2022. While London is still considered less of an attractive investment when compared to opportunities in the north, these predictions suggest a positive future for the capital. Predictions from the Royal Institution of Chartered Surveyors suggest that rents in the UK will increase by 2.5% due to an ongoing gap between supply and demand in the UK property market, paired with average house price growth of around 2%. If true, this suggests that now is a great time to go ahead with your buy-to-let investment, allowing you to purchase your investment property before it rises in value while also benefiting from attractive returns. Both home buyers and investors are curious about not only house prices after Brexit, but also mortgage rates and how mortgages will be affected now that the exit from the EU is finalised. Over 2020, mortgages have changed in line with the coronavirus pandemic. The majority of lenders began to close their 95% mortgages, which were common with first-time buyers. While 2020 has brought issues for first-time buyers who favour affordability when agreeing on a mortgage deposit deal, things have looked up for investors and those buying a second home. This group of buyers were able to benefit from some large savings through the stamp duty holiday. The stamp duty holiday was announced in July 2020 and allows those buying a second property to save money on stamp duty tax. The announcement of this tax break helped to boost UK housing market activity, which has also caused mortgage rates to rise due to demand. Mortgage rates have fluctuated throughout the year, and despite high levels of demand remaining, rates are currently low, which is good news for those seeking a residential or buy-to-let mortgage. Experts have suggested that mortgage rates should remain promising following Brexit, which will hopefully encourage more market activity throughout 2021 and beyond. The threat of COVID-19's impact on the UK economy and property market has somewhat overtaken Brexit uncertainty. But just how much impact will the combination of the coronavirus pandemic and Brexit have on the UK property market and house prices after Brexit? While COVID-19 has undoubtedly had a big impact on the UK economy, with many people out of work and many businesses failing, the outlook for the UK property market remains positive. With the average UK property price now at a record high, the UK property market has experienced a similar resurgence during the coronavirus pandemic as it did back in October 2016 following the initial Brexit vote. Hopefully, the UK property market will follow a similar pattern over the coming years as it did following Brexit uncertainty. With predictions for huge growth in property prices in the coming years, property market predictions for 2021 and beyond look promising in the face of both the COVID-19 aftermath and the outcome of Brexit house prices. Savills, for example, released updated property price predictions which estimate that UK property prices will grow by 20.4% by 2024. Within the same period, even higher growth of 27.3% is expected for the northwest region, with Yorkshire and the Humber following behind with house price growth of 24.1%. There's definitely a lot to think about when it comes to the issue of property prices and Brexit, and whether or not we can expect a strong housing market post-Brexit's finalisation. If you're considering investing in property, here are some points to take away. Following a slightly rocky period after the initial EU referendum vote in 2016, The UK property market is now in a much more stable state, even with COVID-19 and its effects on the economy. Now that the UK and EU have agreed on a Brexit deal, new rules on trade, travel and business will take effect from the 1st of January onwards, and confidence in the housing market will surely continue for many years to come. Ultimately, the question of will house prices go down after Brexit is dependent on factors such as the Brexit deal and the UK area you're looking to buy property in. The majority of experts, however, have confidence in the market moving forward. Recent house price predictions post-Brexit have revealed an increase in property sales in December 2019 compared to the previous month, and experts have predicted that property prices after Brexit will continue to rise throughout the coming years. When it comes to property prices, the Brexit housing market may see some regional differences in house price growth. According to past property market patterns and expert predictions, cities in the northwest region are expected to have the strongest housing market after Brexit. According to property market analysts, cities where wages are increasing in line with house prices will perform at the highest rate in the coming years. In a recent report by HomeTrack, Liverpool is revealed to have rapidly growing house prices. Despite this, however, the city is also hailed as the second most affordable city in the UK, which can only mean that wages are increasing. Both before and after Brexit, property prices in Liverpool present Liverpool opportunities as the most attractive in the UK. If there's one thing that you can take from the UK housing market throughout 2020, it's that it's incredibly resilient. Even in the face of economic turmoil due to the COVID-19 pandemic, both UK property prices and property market activity have remained strong. This is a good sign that in the face of any issues that may arise, house prices after Brexit should continue moving in the right direction, whatever the outcome of the EU exit. With the stamp duty tax holiday lasting until March 2021, investors that are feeling apprehensive about Brexit and house prices should consider the significant savings they could make by buying property in 2020 and 2021. Investors could save up to £15,000 in stamp duty tax, while enticing deals like assured rental yields are also being introduced. With the rental market and house prices after Brexit expected to increase, now really is one of the best times to invest in UK property. Not only is the average house price after Brexit set to see an increase, but predictions on the housing market after Brexit also reveal rental price growth. This is a great sign for UK buy-to-let investors, boosting rental yield and capital growth potential. Research by JLL suggests that along with a rise in the average property value, rental costs in Liverpool and Manchester are expected to grow by 3%. Thanks for listening to the Property Talk podcast from RW Invest. If you still have some questions on Brexit and the UK property market, feel free to contact our team. We have experience and expertise in all things property investment and are able to talk you through our most promising investment options for 2021 and beyond.